Welcome to Momentum Monday, guys. Howard?
Sunday night, end of February, Ivan. Why are you watching the Academy Awards?
No, I'm not. I mean, I barely watch TV, and
You seem so cultured.
Yeah. No, there are a few shows that I enjoy watching.
What's your favorite Netflix show right now? What are you binging?
Right now on Netflix. Right now, I'm not watching anything. But
is there a Sopranos of Bulgaria? Is there a crime family?
Quite a few of them, yeah. I mean, basically, the whole country is run by mafia.
Yeah, why would you rip it on your own country, man? Come on. So, what'd you do this weekend?
I played volleyball both days, today and yesterday. And after the volleyball, I had a picnic with my girlfriend.
How old are you, 70?
I mean, picnic are not related to age, so...
It is. It's totally related to age. Stop acting like a 70-year-old person. You are romantic, though. And tell me, did you have your shirt on or off for volleyball today?
It was cold, so on, of course.
Are you saying if it wasn't cold, you would have been shirtless?
Of course.
Wow. Okay. It's bold. Very bold. I am coming to March 1, spring break, coming to San Diego.
I'll be here.
So on that excited note, so you may actually have to show your face, and we'll do a show face to face. Okay. On that excited note, let's get to the markets.
Yes, let's go.
Give people a quick tour. It's been quite a year.
Yes, I will make a quick tour. Let's start with...
We're looking at Market Smith kind of charts here. Our sponsor of our show, but maybe just zoom in. Let's make sure everybody's seeing just the screen now.
Yes, everyone should be able to see my screen.
There we go. What an incredible 2019 this has been.
Yeah, I think the small cap index versus 2000 is up already 18%. S&P 500 is up 12%. So quite. I mean, the market can close now, and it will be a good year. But of course, it's not going to happen. And last year,
the same start to the year. I mean, it was just January, and then all the the math said as it goes January, so goes the year. And so far that holds true this year again.
I mean, I wouldn't believe that too much. Every year is different. And last year, we saw a lot of
people were saying. Now I think this year could actually happen because everybody's going to look at last year and say, well, look what happened last year when we followed that rule. But anyways, I'm just happy to see this. I mean, this rally is a reminder of timing the market so hard. You have a strategy. December was one of my most painful months. I was stopped at so many long-term positions. If December had if December had continued another couple of weeks like that, I would have lost a lot of my positions. And that's just the way the market works. For whatever reason, we turned on a dime, and in hindsight, Ivan, that pivot above the highs there in beginning of January, middle of January, you could have waited until middle of January and cut some really great runs.
I mean, if you remember,
I was trying to catch a piece of the bottom in December. There's just no reason to try and catch these.
Yeah, that's absolutely true. But even though there were some very clear signs that we might be close to a tradable bottom in December. If you remember, we highlighted how market breadth was so terrible, like it was the worst market breadth since October 2008. But during market panics, people tend to believe bearish headlines, and everyone is scared, and oversold market can get more oversold.
No doubt. But
it's not easy. It's easy only in hindsight. In real time, it's never easy.
Again. So with this hindsight, I'm looking at when you have these type of panics, there's plenty of opportunity to buy later on. You don't have to be a hero in the panic.
Yeah, absolutely. Even though when the market bounced here, then many people were saying, "Oh, we will test the the low for sure." Like the markets always test. I mean, as you can see, there was no test. There was just a straight line up. The S&P 500 hasn't closed below its 10-day moving average since late December. Like we're talking about a really sharp trend, and it's back to 280. 280. That it was a significant level.
We were there last April, May.
Yeah.
Yeah. It won't be easy going forward, but there's a lot of new leadership, which we'll get into. So on that note, let's get into, keep it short because, again, I want to get fancy here.
Yeah, I mean, let's cover a few major themes that we're seeing right now. Like the other day, I ran a screen just for ETFs, just because I was curious, and I saw five major themes. I saw two precious metals. I saw palladium and gold.
I'll take for palladium. Yeah, I don't even know what fucking palladium's used in.
Me neither. It's some form of precious metal.
Precious metals.
So palladium and gold. I mean, very weird combination in a bull market. Typically, gold goes up when there is a political turbulence, when there is a inflation expectations are going higher. But the US dollar is also strong, so very odd combination. But it is what it is. This is what we're seeing.
Let's get off gold because in the end, we're talking about off the bottoms at 10%.
Exactly, and then the other few major themes that we're seeing, Brazil.
Okay, that's interesting to me because it was strong through the whole December too.
Yeah, they have a new president.
And their neighbors at war or crumbling in Venezuela, and go on and on and on and on. And so I think Taiwan and Brazil are the most interesting. The other one and Taiwan's not a great ETF. I think it's EWT, Ivan. So other than Brazil, and I was with JC all weekend so I don't think Taiwan has a lot of this index.
Technically, no. I think currently Brazil is looking the most interesting technically.
No, but Taiwan, but this isn't an ETF that's representative of what I think Taiwan, and I was going through this with JC this weekend at his chart summit is semiconductor. This ETF, I don't know if we can look at what the components are. I think on Koifin we can.
Mm-hmm.
But I just haven't had the time to go through it. But the semiconductors wash this. I'm really fascinated by some of these Taiwanese companies which are starting to break out, and Taiwan's just a semiconductor kind of central, or at least old school. And I think we'll get into this with some of the med tech stocks this week. But in going through some of the global charts, definitely Latin America and Brazil.
Yeah, absolutely. Brazil, as I said, they have a new president who is supposedly pro-business, and the whole country looks very constructively. You can see that consolidation here near 52-week highs, and
it was a huge move off of, Brazil is going to be the end of the world after the World
Cup. Two of the more interesting Brazilian stocks to me are payment stocks. This is one StoneCo. It's a recent IPO.
Very speculative, but I've been following it.
Yeah, it broke out last week.
This is PayPal meets Square. I haven't done enough on it, but yeah.
And this is the other one, also recent IPO, PagSeguro. They had a pretty strong earnings report on Friday, and as you can see, the market reaction.
That's why STNE was up. I have to separate the two, but I'm doing some work on those.
And then of course we have Mercado Libre, which I think it looks very constructively as well, but they report earnings.
Can you give me the monthly on Mercado Libre? This is basically, that's basically, if you want to just bet on the internet in Latin America proper, that's a pretty big base that it's digested. I mean, this is just such a big company already. Yeah. Market cap is 20 billion.
Exactly, and very high short interest, 6 days. Very high short only 40 million.
It's the equivalent. This was eBay of back in the day. eBay of Latin America. Now, they've obviously done a better job than eBay. In terms of solidifying their market. So if you want to just on a breakout above 400, that is very, very interesting.
Yeah, I mean, in a strong bull market, and we might be in one, this is very possible. especially if.
Thing that I don't do that much international. Let's go back to semiconductors for a minute. Everybody thinks this was done, especially with NVIDIA getting wiped out, but I think we can see here that might have just, that may help the long-term bullish scenario. That December washout and panic and the movement out of FANG and NVIDIA could be the biggest head fake, of all time. Because you've turned bulls into bears, you've turned, and you're not letting people back into this market, right? And in the end, if you're looking at the semiconductor, if we wipe out, that 6 months, it's really just a long base digesting the last, 3-4 years of up moves, and that just, I'm not gonna listen. It was, protect your capital in December. It was, lick your wounds in January, February for not being 100% long for the rally. But I'm not going to get bearish. There's a lot to be proved here still, but there's so many reasons based on machine learning and biotech, Latin America. There's some interesting reasons to be long here, or not to pan, or at least not to just think that this is going to go retest its lows any.
Yeah, at least don't be stubborn and don't go against the trend. I mean, I would definitely be paying attention.
Also, with politically, Trump we know is a gambler and he's just guessing.
Yeah,
and he just got like 10 things in a wrong row in terms of his own, and he's a coin flip guy, gut instinct. Person, and he was just wrong for a month straight. Every time he opened his mouth, it was the exact opposite. And the market definitely was stressed about that, I think. But in hindsight, I think this rebound is starting to be more interesting than the sell-off ever was. And if we look at FANG, the reason the NASDAQ 100 is just not close to its all-time highs is Amazon's down 20% still from its all-time highs, and Apple's down 30%. I mean, look at Amazon. I mean, and if we look at Apple and Facebook, same thing. So just following the NASDAQ would confuse you, right? I mean, there is no leadership other than Netflix. Is maybe the closest of the FANG stocks to.
Yeah.
To regaining its glory, but you're not going to. The Nasdaq's going to lag. This has all been small cap. The other thing, Ivan, is interest rates. We talked about it. I talked about it all weekend. Interest rates are backing off, and so you're just not going to have a crash. And you just when you have 9 weeks up, this is not bear market action at all. If we had sold off on the S&P after that 2-week rally mid-January, the bears might have had a story, but there's no bear market story. And by the way, if that was the bear market, mathematically or statistically it was. It's just it's okay. It was a 3-month bear market. So let's look at what's working. So Brazil, yes. Semiconductors, yeah.
So the other two teams that I wanted to mention, of course, one of them is software. This is the BSJ, which is the software ETF. As you can see, it doubled since
oh my God,
since March. So this is a super conservative way to play it with an ETF that any advisor can own for their clients. Even that has doubled.
And the point about this software ETF, all the companies in it, because I've gone through it, are pretty interesting. It's not like a retail ETF where you don't know what you're getting. These are all software companies, and software at this point is not just eating the world. I think I heard someone say, but we need it to save the world. And so what I think about interesting about this, there hasn't been that backlash against software, right? Like the Facebook backlash. These companies have from Salesforce, these enterprise software companies have avoided the scrutiny of the media. And so So I agree. We've been bullish. Obviously, most of the stocks in our portfolios are software. I would say 80% of companies in my portfolio are fashion or software technology. So, I kick myself about Apple, and I have there's so many bears. The only thing that gives me some hope is that so many smart people who just love to hate on Apple continue to hate on Apple. I'm definitely been wrong. So I'm not going to double or triple down because it's $800 billion company, but
I think Apple is still in a position to outperform the general market. So if you're bearish on Apple, you should be bearish on the general market. So
yeah, exactly. So I got enough Apple. So let's go to some other ideas that I like. I think you've mentioned some Brazil ones, but the biotech. Let's go to the SL50.
Yeah, sure. Biotech, definitely. I mean, there's so much gene editing.
There's, just so you know, everybody, this is Market Wisdom. Ivan runs this. It's an incredible, and there's about 50 stocks in this list that Ivan and I find our ideas from. We've curated over years. Ivan, how much is it a month?
It's only $99 a month, very affordable, or it could be $79 a month if you sign up for an annual. And speaking of the Momentum 50 list, by the way, I promised some subscribers to talk in more in depth about the list, and I'll do a separate video on that. But just for a minute, I can mention that people ask me what criteria do we use, and we use criteria that have historically proven to provide market edge. I mean, criteria like market reaction to earnings.
Yeah, this isn't just a blind price list, like in relative strength. We've gone beyond.
Yeah, there are quite a few indicators that we've taken into account so we can gain an edge. And historically, stocks that have received favorable market reactions, a strong favorable market reaction to earnings, have continued to outperform. After that, also stocks that are near 52-week highs or breaking out to 52-week highs also tend to outperform. Stocks that with 12 months relative strength also have provided edge. And we combine a few other technical indicators. So when you combine all of these, you get a list of 50 stocks, like a pond to fish, that can substantially improve your likelihood of catching.
Yeah, one thing I've added back, Ivan, and that nobody has, that we kind of track is, this, if you can, I'm rolling over it right now. I don't know if people see the number of StockTwits followers. So I think an interesting thing that we have data on, anybody could probably put this together if they were a quant. But we have been running this for years. Is I really love, and I can't prove it, and I'm working on some ETF models, but I really love seeing the highest momentum stocks with the lowest amount of social followers, and not just YouTube. I think StockTwits is a really good indicator of sophisticated, or at least stock jockey or prosumer type stock junkies. And we can see, like right here, PayPal. Even though I love PayPal, it's not undiscovered. There's 35,000 StockTwits followers. So you can see it's never going to have the same juice, meaning it's been on the list. If we generally have stocks on the list of 18 weeks, usually in the 30-40% gains. Yeah. So you can see, for example, and this is what we bring to the table, you and I, and this is kind of one of our edges that we can't quantify per se quite yet, but something that I feel confident when I try and pick stocks is, I love PayPal, and it doesn't bother me that 35,000 people follow it, but you can see other stocks like Workday, even though it's a huge brand, but kind of huge market cap, has been on the list 15 weeks and up 40%. And we can see Alteryx, been on the list, has 2,000 followers on StockTwits, one of the highest momentum stocks, and it's up 27% over that kind of same time frame. And Splunk, we can go down, on and on. So I'd really like this. No, we don't want to show the whole thing, but I can go back to the top. So what I really think is interesting, and what we're always trying to do, Ivan and I, is think through new data sets and how they apply to systems that already work. meaning the institutions know who Zscaler is because that's their job to know that they're a leader in security software. But regular people that are home gamers and trying to own stocks have never heard of this. So when you combine all, that's extra juice. If Zscaler continues to build a brand, like a PayPal is to payments, and ends up with 30,000 followers on StockTwits, I can tell you the stock's going to quadruple. And if we look at Twilio, same thing. No one to this day still can explain what Twilio does. I know because I've been studying it forever, and following it, but there's very few people following, other than momentum investors following this company. So that's how the list works. So I've been on the top few names there. Is there anything that stands out?
It's the same team, software, enterprise software. I mean, I think it depends, depending on the time frame.
Obviously, security software, cyber, Checkpoint broke out this week. Zscaler's, this company is
cloud security architecture.
Yeah, but it's all in the cloud. This is
related to cybersecurity.
Yeah, Zscaler, same thing. We're seeing, and the hack ETF is probably at all-time highs.
Not yet, but it's definitely its relative strength has been improving. Last week we saw breakouts in quite a few sectors that.
As JCs like to say, you want to own stocks that have happy faces.
Yeah, that's been forgotten.
You want to focus on companies in happy. Oh God, even solar.
Even solar, as I said, even gold, even solar. It's pretty incredible market. Like I don't remember the last time I've seen such good market breadth, and it's definitely better than even 2017.
So this is like one of those years where all that money didn't just come out of FANG and leave. That money came out of FANG and went everywhere else.
Yeah, I think
we have Bitcoin of real commodities and palladium. We have risk on in Latin America. We have risk on in semiconductors. We have risk on in biotech. We didn't even cover that today, but I'm tired. So this is a perfect time for the market to sell off because we haven't given you anything negative to think about this week.
Yeah, everything is bullish. I think it's important to see how the market will react around that level 280.
Yeah.
And
again, I see 20 entries that I would like to make, and that's just too easy. We've made a few, but at the same time, this is a perfect time for the market to pause. But I wouldn't bet it. I wouldn't. I'm not trading it like that. I'm kind of keeping my. We got China starting to bet.
Even China is starting to break out. So
I look at it as not as breakouts, it's like risk on. People are putting money to work. And if you had told me that Amazon would be 20% in the S&Ps and 3-4% from all-time highs, you would have laughed. In the end, if someone had given you that bet and asked where the S&P was, if Amazon would be at 1,600 6 months later, or Apple would be at 170, you would think we were in a crash. And by the way, we did in December, and the market moved on. So people need to remove FANG stocks from their screen for the time being, stop talking about it, turn off the TV, and start looking a little deeper if they want to make money. At the same time, like I'm saying, this would be a perfect point for the market to just turn. I just don't think that's going to happen at any major level. December turned out possibly to be a head fake. Ivan, have a great week.
Thank you, Howard. You too.